Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Friday session. Today, we're going to talk about the weekend volatility, and right now, that's going to be all about the Iran war. We see signs of escalation. We see some really serious things happening on the energy front. I'm going to go ahead and cover U.S. oil and U.K. oil again, but we're going to be brief about it. We're not going to dwell too much on the oil markets. We're going to talk a lot about some of the concepts that are filing into what I call a relatively strong view of what's going to develop here in the Iran situation. I don't think there's much doubt about it anymore, about how this is going to go. We're still optimistic. We're still holding out hope. I guess it's okay to hope in situations such as war. You need hope there. If you find yourself hoping in the markets, you're in big trouble. So I don't recommend trading and being hopeful when you trade. I believe in being confident and being direct and being deliberate, and at a certain level being hard, having a hard shell, being a competitor, showing up each and every day ready to go. That's sort of what I preach on these streams. Discipline, risk management, taking trades with a positive expectancy, expecting to win every trade even though that's not possible. Things like that are what's going to help you get through some of these hard times. I've got a lot of messages from traders over the past several days. It's been a rocky week. There's no two ways about it. I'm not going to sit here and sugarcoat it. what's happened this week in the markets, I believe we are pivoting towards a completely different economic cycle and market cycle. I believe that we're now relatively certain that the war in Iran is not going to finish the way that we thought it would 3 weeks ago. Tomorrow's week 4. And we're going to go ahead. We're going to go over the odds. We're going to talk about where we likely go from here and what has really settled into sort of be a war of attrition. But now we're starting to see the next step. And we're going to define that for you clearly. We're also going to recap some of the news that was over this week. I want everybody to sort of understand what's happened over the last 5 days. And if you've struggled, here's why. I can almost guarantee you here's why. We've also got a horrible economic indicator that came in Thursday. This isn't the doomsday stream, believe me. I don't have a helmet on and I'm not behind the sandbags. This isn't a doomsday stream. But this is one of those streams where we have to be stone cold sober about what we're seeing, and we have to be braced and prepared for what could come next. Now, then again, I've been wrong before about a lot of things. I've also been right about a lot of things. But it always helps to prepare yourself for all the eventualities and all the different scenarios that can face us as active traders. So I want to welcome everybody back to the room. Let me see Sock. Let me see Socket. Good to see you, Socket. All you have to do to contact me is head on over to howtotrade.com, get your free account, click on my picture, and you'll be able to send me a private message. If that does not work, just go to the front of the howtotrade.com website, go down to contact us, send them a message to the back support team. Hey, I want to talk to Shane. Get me in touch with him, and they can probably put you in touch with maybe a link to contact me, or you can just post whatever you want to post right here. I'm in the live chat on YouTube, and I'll take the time out to answer you. That's for sure. It's good to see you, Jason Maxim. Hey, Jason, how are you? Let me see. Forever Ansalam. Good to see you, Forever. Welcome. Tina Jane, good afternoon, Shane. In the same time zone with you now. Well, Tina, you're a globetrotter, world traveler. I'm confident your travels went well. I'm sure you had a nice time. So it's good to see you back live. That's fantastic. Tuku, always a pleasure. Tuku, welcome. All right, everybody, let's go ahead and dive right in. Let's go ahead and start with just a couple of things that price action-wise that we do need to begin with. Let's go ahead with a trade update. This was a trade that I put out earlier today. Incredibly confident in this one. This is a bigger trade. This is a bigger trade than I usually put down. We're shooting for about $43 in profit on that gold, and this is a big one. To me, being able to execute a trade where potentially you would have to risk 4,000 pips or 3,000 pips, it sounds like you couldn't do it. But just take your leverage down. I mean, realistically, what if you were going to risk 5,000 pips on a gold trade? 5,000 times what, 0.01? You could easily make this worth your while by just playing for maybe, 50 cents a pip, something like that. It's only a $2,500 risk. I'm not recommending that. But maybe if you just wanted to build that down, go with a 10 cents a pip, something like that, real small. That's a $500 trade. 5 cents, 250, 1 cent. You could be in it for $50. So there's nothing wrong with taking your leverage way down. The reason why you're going to have to adjust your leverage is because this is a bigger trade. This is a short-term position trade. Potentially could draw against us a little bit, but I would like to give this one a little bit of time to simmer because I believe it's probably the biggest level that we've seen in the gold market since last month's retracement to this same zone, and I think it's worth hitting again. So let's go ahead and get out to price action. You can see our monthly gold chart. I mean, there it is, right? We're working Fibonacci spike low from that November of 2024. What happened in 2024? It was the election. It was the election. Big pullback on the election, and then we saw the break, compression break, and this takes us up to the present time. All-time highs up around 55.98, and now we saw the compression of last month, and now we're rotating back down. That 38% level was very good to us in February. That was what I call a banger. It hit it perfectly. It did not take a draw, and we rotated to the positive in a big, big way by about $1,000. That was about a 20%er. Some people got this trade. Institutional traders got this bid, and that's their year. Now it's just nothing but boat drinks and suntans. Well, we're not quite at that level because we don't have that kind of capital. But as retail traders, we do need to understand how big of a deal that level is. That level ensures that the uptrend in gold is still valid. Now, what we have setting up for March, and there's still, about 10 days left, 11 days left in the month. If you do see bearish price action and a big sell-off in April beneath March's low, then we have to start assuming that it's going to take a long time to get back up to that 5,000 level. Now, you're not supposed to assume anything, but in this case, we really could. We saw the big breakout on the weekly up here. We outlined that yesterday. I'm not going to cover that again. But now we're testing the long-term trend. We are testing the schematics of the long-term trend, and I want everybody to be very clear about what's happening here. This is a monthly chart. You can see that those pullbacks, this pullback is the biggest one we've seen, maybe ever. maybe ever in the gold market. I mean, this goes back to what, about 2004? Look at the size of this pullback. It's epic. It's epic. That's where the rubber hits the road, right down there at about 44.28. We want to be aggressive, looking at 44.35s. I think that's absolutely huge. That could be the trade. That could be a really big trade. And so you got to dial your leverage down, though, 1 to 3%. If I was going to make a 3% trade or a 5% trade, that would be it. It's a very good level. It's one that I'm watching closely, and I think that we're going to get some good action on it. Right now we're trading about 45.75, but the leverage, the volatility is huge in gold. It's absolutely huge. So if we have an opportunity to bid down there, sign me up and give me seconds. Remember, there's no guarantees, and this is just a level that I'm looking at. It's not financial advice. You have to do what you have to do, but manage your risk according to what you can afford to trade. 1 to 3% on any given trade. I'll look the other way if you have to go 5%. In order to do that on this trade, you're going to really need to dial down the leverage. You can't just step up with a highly leveraged position and buy the entry somewhere right around 44.28. You cannot do that because the market could easily draw down. It could easily draw down against us, and we could be in big trouble. So we've got to be able to give this one time to breathe. I would say almost $50 of room to work. And if it doesn't react immediately, then I'll start to wonder about what's happening. But for me, I think that's a really strong area. But it could get swept out. I mean, the world is changing. Just as we've been speaking, the Dow is off 300. Now it's, only off about 150. I mean, this is just crazy frenetic action. And that's really suggestive of Friday trade during a war. And that's the bottom line. That's all there really is to it. Let me see, Daniel, why the tie? Why not? I didn't wear one this week. I don't know if it's in my contract. I have to wear one each week. No, I'm just kidding. No, I figured I would go to the tie. I got the red tie today because we've got to definitely, we got to have our eye on the prize and find if I button up a little bit tighter, maybe I focus better. I don't know. Let me see, Johnny. Good to see you, Johnny. Welcome. Tie is looking sharp. That's the bank attire. Yeah, it's funny. I was going to the bank wearing my old clothes. Never dress up to go to a bank. You don't want anybody, unless you're applying for a loan or maybe for a business loan or something like that. You never dress up going in and out of a bank because you don't want everybody else to know how much money you have. That was an old lesson I learned as well from a couple guys that were really wealthy. I'm not even close to being in their league, but they basically dressed like bums. They did not dress up. They did not drive nice cars. They said, I don't want anybody to know how much I got. And that sort of stuck with me. So I always laugh at that. Let me see, Ralph H. Good to see you. The opposite of casual Friday. Yeah, exactly. We threw him a curveball today. We went with formal Friday, right? Formal Friday. That's for sure. Thank you, Eli. Good to see you. 512 Eli. Tie's looking sharp. Yeah, thanks. Daniel, or just do the 0.5% and play it without losing your house. You could do that as well. There's nothing wrong with 0.5% if you have enough capital to do it. If you're trading a smaller account, you're probably going to have to go 1%, potentially 3% to make it worth your while, but something like that. This is not a high-volume trade, though. You're not going to get another chance at this. Probably going to be this, and then that'll be about it. Maybe. Who knows, though? Maybe. Hello from South Africa, Andrew. Good to see you, Andrew. Welcome. All right, Eli, I like 0.5%. Hey, you guys are talking risk management and aggressive risk management. That's absolutely fantastic. All right, let's get out to the other metal. I know everybody's talking. I was talking with an analyst out of the Middle East yesterday on a live on a live call, and he said, "Hey, listen." He goes, "Shane, are you getting in on any of this silver action?" And I said, "No, I'm not." We sort of had this market pretty much nailed. I mean, we knew 75 was big. There was the demand zone. You could see we did check that back on the 18th of March. We hit the low there, which was 75. Got a beautiful pop back up to about 76.7. That's a great little scalp, but then we washed it out. We washed the silver market out, but we've sort of got that bounce. We're hanging right around $70 now, so maybe instead of 75, 70 is the next big one. That was a tremendous negative swing, though, in silver at what point yesterday before it recovered a bit. We're still bearish here, though. For whatever reason, money is flowing out of metals. It is flowing out of stocks. It's going into energies, and the U.S. dollar's holding firm. DXY is right around 99.5, which is huge. You're right at 100. That's sort of bullish for what we've seen from the USD. Money flowing out of crypto. I mean, even crypto is getting hit a little bit. Bitcoin's sort of back up to that 70 level. We have just been on and on and on about the not necessarily the futility of Bitcoin, but just how dead this market truly is. And I mean, it is dead as fried chicken. It really is. Yearly support. I've been waiting on 58 buys forever. I'm so sick of talking about it because it's like, are we going to get it or not? And it doesn't look like we're going to get it. 69. This market is an absolute consolidation, yearly range. Spike low down there at January 2022, all the way up to January 2025's highs, and we're just rotating around the 50% level. Take a look at our daily, right there at about 70,800. I mean that is it. I mean that's seesaw. There was our big move. Just missed. Oh, that one hurts too. That's a great trade. But this one goes up. It goes up. So now 70's resistance, right? And then we dip, and then we go back and sell off and get compressed, and then we rally. And now is it support? No, we broke down. Now we're just sort of consolidating around 70. I hate it. I absolutely hate it. I never use the word hate, but I hate charts like that. It bores the hell out of me. Absolutely boring. So that's my look at Bitcoin. I get a lot of questions about crypto and Bitcoin, but essentially that's what we're looking at. It's an absolute garbage can right now. Are you bullish or bearish? God, who knows? At this juncture, who knows? And, you know, one of the things about this stream, there's a couple of rules. If it makes money, it's the right answer. Ask questions. It's cheaper than losing money. And the last one is, if I don't know, I'll tell you I don't know. I have no clue which way Bitcoin's going. We're going to talk a little bit about AI and how that could be destroyed with the coming energy war, it looks like, in the Middle East. That's definitely going to impact Bitcoin and crypto. Your guess is as good as mine. I just know this. The market is in consolidation. Long-term bullish trend is still intact. Price is above 58,000, which is the 62% retracement of that monster range I just showed you. So you're still bullish. It's just, where is the participation going to come from to drive you back to 100,000? I don't know. I genuinely don't know. That's for sure. All right, let's go ahead and get on with the program here. You can see week 12. I think it's week 12, might be 13. Who knows? Monday, Iran war. Tuesday, it should say just Iran war for every single one of them. We covered FOMC Live on Wednesday. That was a lot of fun. Thank you for joining me. Thursday, BOJ, S&B, BOE. Yesterday, we did a how to trade crude oil webinar over on the Switch Markets Live platform. You could see that all of that news. Probably should have covered the news and planned the webinar for a different day, but we're going to cover it right now. Not much happened. All in all, not much happened. Friday's No Donation Friday, but there's a lot in the news, and it's a lot about risk. Very briefly, No Donation Friday, very simple concept. Winning week. If you're having a winning week, put 50% of it in your pocket. If you're having a losing week, trade as usual if it's a small one. If it's a big one, put your money away, come back Monday. If you're neutral, trade as usual, reduce your leverage, or don't trade at all. I don't care. If you're at zero going into Friday, maybe you're tired, take an early vacation, take an early weekend. If you want to keep going and you feel like there's a good trade in there for you, or you got good setups, then trade as usual. And if you are sort of struggling this week, a lot more losers than winners, but a couple big winners, cut your leverage. Just make sure you don't go into a giant hole on a Friday. That's no fun. I've done it. Ruins your weekend. All right, here's the news of the week. BOC interest rate decision, 2.25%. They held firm. BOJ held firm at 0.75. The S&B, that was the one that I thought they might get a little crazy, and they might do something that maybe is a little bit off kilter, that sort of bucks the trend of what we're seeing with everybody just standing pat as policyholders. S&B did nothing. The BOE did nothing. But what is instructive about the BOE is that they all voted. They all voted, to keep the interest rates changed on the pound. Interesting, isn't it? Very interesting. 7-2 was a surprise last time, 5-4 the previous, now 9-0. So that's sort of unanimous in Britain. This was fascinating. This was a gem that I didn't hear a word about yesterday, and people should have been talking. Economists should have been talking. The people on CNBC were too busy droning on and on about oil prices. I'm like, we got it. Straight to Hormuz, boots on the ground. We'll cover it all in a minute. But they didn't even want to touch new home sales. And this is a big one. And you say, Shane, what are you talking about? You're always, you play numbers up and then you tell us other numbers don't mean anything. This number means something. Now, is it going to impact your markets right now? No, it is not. No, it is not, because the Iran war is the one and only market driver facing these, because it dictates everything. It dictates interest rates, energy prices, global economic prowess, and also geopolitical stability. It dictates everything. Right now, these numbers don't mean anything, but you got to put a pin in them, because we're watching a trend very closely. New home sales for January came in at 587. This is for January now. We're already towards the end of March. We don't know how bad the situation is in February, and we don't know how bad it could be for March. You're going to say it's seasonal. We're going to talk about why that's not the case here. New home sales, January, 587,000, beneath the 722,000 expected and beneath the 712 previous, which was revised down. New home sales month over month for January, negative 17.6%. Negative 17.6%, beneath the negative 6.8% from December of the final year that was revised down. Bottom line is these numbers are really bad. Now, everything's relative. 3-year look at this number. It don't look so good. It doesn't look so good. You say, Shane, listen, North America, you talk about real estate being cyclical and seasonal. I said, yeah, well, there's a January right there in 2025. Oof. How about January here? January in 2024. January in 2023. That's horrible. That's the worst number we've seen in years and years and years. What does it mean? Maybe there isn't as much new construction out there. A lot of folks are going to say that. They're also going to say it's the winter months, so you can't really talk real estate with that much of conviction. And I'd say, yeah, I can. I know this. I know on a basic histogram like that over 3 years, and you see a bar that small and a number that low, what's the problem? There's a problem. There's trouble in paradise. And we haven't even got into the spring numbers. They will tell the tale. I expect this trend to not continue. I expect a spike in it. But I'll tell you what, that right there is very instructive about where the U.S. real estate market may be heading and maybe has already started its descent. Does this mean recession? You got to remember, these numbers were before the war. Let's say this war goes for another 6 months. Where are we going to be then? It's an ugly economic scenario. I'm not a doomsday guy. I'm a happy guy. I see opportunity in everything. But I'll tell you right now that that's an absolute huge figure. So let's go ahead and talk a little bit about U.S. oil here for a second. We got some questions here over in the live chat. More than happy to answer. Tran, good to see you, Tran. Hey, what's up? Doing well, Tran. I feel good. You're joining over on Facebook Live. Check out our Facebook channel, Switch Markets. I just built my own page on Facebook. It's just Shane Vernier, but there's nothing on it. It's just a picture of me in a cowboy hat. So we'll see if I actually post anything on there. We're available. Shane V_trader on X. I'm over there. If you want to ever message me or anything, you can do it on the X platform. Also on LinkedIn. We're all over LinkedIn, so feel free to check us out on any of those platforms. But good to see you, Tran. Welcome. Daniel, it doesn't pay a yield like gold, but it lost its appeal. I think Bitcoin is a dead cat. Well, you said it. It's not a dead cat. It's not a dead cat, but it's definitely a sick cat. It's a sleeping kitty. How's that? It's a sleeping kitty. I'll go with that. I don't think it's dead. Let's see. This is a very bad number here. New home sales are shocking. Yeah, it's absolutely horrible. It was from yesterday, but today we didn't really have any economic data out, so we have to cover it. It's absolutely horrible. River Lee, hey, Shane. Hey, good to see you, River. Long time. I'm confident you're doing well in your part of the world. I hope the move went well. I believe that was years ago. But yeah, good to see you, River. Always a pleasure. Daniel, Florida has no winter. This is horrible for sure. Not good. It's not sure. People have no money or the banks don't want to lend it out. Well, I'm actually heading down to Florida here in a couple of weeks, so I'll give you the report on the ground. I got to get on the beach, get a little tan. Money never sleeps. That's a fact, Eli. Okay, so let's talk a little U.S. oil. Remember, if you want to trade any of this stuff, especially oil, Switch Markets has you covered. 0% commissions. Start trading today with Switch. They've got Brent crude, WTI, U.S. oil, UK oil, spot futures for all of those that joined the webinar yesterday. I hope you enjoyed it. I showed you a lot. We had a couple great trades, but we definitely got after the oil market. So if you need any of that action, Switch Markets has you covered. If you're interested in trading oil, we do cover oil here pretty much every day. It is my specialty. I'm sort of at heart, I'm always a commodities trader first, and U.S. oil is definitely at the tip top of my commodities list. But this is a fascinating type of a dynamic we see with U.S. oil. We're printing 98.22 right now going into the weekend. I'm going to show you why, but it should not surprise anybody, the situation that we are now in with oil. All the bluster didn't work. Opening the strategic petroleum reserves didn't work. The G7 saying they were going to open. The IEA saying they were going to start pumping oil into these markets. We know there's only enough reserves to last probably a month to 6 weeks. Everybody knows that. Even though shale output is on the way up here in the United States, that will play huge potentially into the global energy dynamic. Also, some restrictions have been taken off of Venezuela. Venezuela is going to be able to export global crude. But guess what? Nobody cares. This is all about the energy war that's developing in the Persian Gulf. We're going to walk through it here in a minute, and I'm going to give you the full what you need to be watching over the weekend. But for now, let's look at a couple of numbers and what exactly they mean for U.S. oil. So U.S. oil here, weekly chart, 97.25. If you get a close above 97.25 and all of a sudden this turns into a hammer, look out. It's not an inverted hammer. It would be a hammer. That suggests that we're going to get up here and debate some of what's in this tail, this long tail to the top side. Okay. This week right here, let's go ahead and show you this. That right there, that's probably the biggest doji anybody's ever seen. That is a long-legged doji. Take a look at it. A lot of people don't believe in chart patterns. You don't have to. That's a doji. What a doji means is uncertainty. I'm not sure that we've ever seen a bigger doji in the oil market for a weekly range ever. 76.59 was the low. The top was 119.50. That's a big range. I mean, that's a tremendous range for us to close pretty much where we opened. What does that mean? It means that I can build the case for the downside of this market. All you need is peace tomorrow. Somebody walks out, says, okay, we surrender, or a peace or ceasefire. Even a ceasefire would bring the oil price way down. Strait of Hormuz, as soon as that's open, okay, that's a different dynamic. But you've got people that say, okay, that we thought that was going to happen here, and it didn't. So now you're right back up to 98. What's the big deal? Shane, you're droning on and on. You're not making any sense. I'm making perfect sense. $100. When you see consolidation around a key level like this, and we're seeing it in a lot of markets, it means nobody knows what the heck something's worth. Is it worth 100? Well, I think it's worth more than that. Well, we don't know. What this means is this war is completely up in the air right now. The way forward is obscure. It does not look like it's going to be figured out in any time soon. And right now is what you have is the markets are factoring in an area. It's building an area of fair value. Right now you're pricing crude oil with the current situation lasting indefinitely. What does that mean for the world? At this moment, it means crude oil, $100. Okay. Institutions go with it. Traders go with it. Great. What does it mean as we start burning through the reserves? And let's say that strait isn't still open for another month. It means that crude oil is going to be trading somewhere up in here. Now, if that doesn't develop and the strait opens, come right back down. Probably come down to 75 and hang out there for a while. So 100's big, 98 clearly is big. I can throw all the levels up that you want to see. It just doesn't really matter. How are you trading this? Tradable levels. You go back to the one that I really liked was the monthly, and you'd be doing something like this. Go right from the pre-war. So you're looking at December of 2025, pre-war, something like this. Gap, we saw that gap area down there. I was relatively confident we'd fill it by now. Hasn't been filled. I don't know. Given this geopolitical situation, might be the exception to the rule. So you've got 100 right here. You've got 38% right down. 95 is going to be big. I would consider bidding 95s here late in the day for a scalp. That wouldn't be a bad trade at all. All right, let's take you sort of into the granularity of the intraday action here. This was something that we got a lot of really great feedback. All of a sudden, everybody wants to learn about the TPO charts, the time price offering charts. We had a few successful trades, and everybody wants to learn market profile. I love it. It's absolutely fascinating. Full disclosure, guys, it takes you it doesn't take a long time, but you've got to actually study market profile and what it is to actually understand price discovery. I've tried to simplify it and break it down as much as I possibly can. Here's what we need to know. Essentially, remember our point of control from yesterday? Well, that one was right up in this area, about 696. Remember, we took those trades. This point of control today, somewhere right down here around 94. We had a lot of trade during that overnight session there, and then we broke into the U.S. session, and now we are trading above value, above the top of this value area, and that pretty much is showing us that we are trending up 2.5%. The market's moving. So key level of the top side could be 100. That would be a fairly decent short side scalp, maybe selling 99.89s, maybe 99.95s, looking for a quick 10 tick pop, something like that. That's absolutely doable. As far as a trade right now, well, you can see right there this point of control sort of during the U.S. session that's developing. Now, remember where we were. This one down here from about 94 during that overnight. Now we're established during the U.S. session right in this zone, 95.77. I would love to buy 95s. Maybe we get that chance. Maybe we don't. For me right now, I don't really see a trade. If we wanted to build like a trade on this futures contract, we could do a Fibonacci retracement and look to buy maybe a pullback, but that is a very tight trade. 97.50. It would be tough to argue with a 5-tick scalp from there. It really would be. That would probably be more than likely a very high probability trade. We're not going to sit here for all day and try to get that, but that wouldn't be bad. Maybe it'll come across the board by the end of the live stream. Watch 100 to the top side. But right now we've broken out of value. You're trading above your value area. Point of controls here. It's just off to the races. Bottom line's this: crude oil is bullish. Crude oil is bullish. UK oil, it's definitely turning into a route for UK oil to the top side. If you want to take a look at your monthlies, there you are. I mean, you're trending towards that 120 level. It's not good. This is very, very, I won't say off-putting, but it's instructive about where the war's at. Sometimes you don't even have to read headlines or have to be on the ground. You can look at your charts and just say, yeah, things are not going well, and they aren't going well as far as the Western world's concerned and the supply of global crude oil. But you can see right here, we came off of these highs, 119.50, went down and checked it out. Brent is being hurt a lot worse than WTI is for the moment, but that will change. I expect those spreads to come in. Right now, UK oil is trading at about 110. U.S. oil is at about 98. I expect that spread to come in a little bit as we roll. Probably on Monday's open, it's going to be a little bit tighter. Right now, Brent's getting hurt worse, meaning prices are going up, and that means when you guys gas your cars up in the Eurozone, I was talking to folks all over the Eurozone. It's one of the great parts about this job. You talk to folks everywhere, and the gentleman told me what he was paying per liter, and I think it equated to about $7.50 a gallon, $7.50 a gallon here in the States, which I was blown away. I said, man, you better get some good gas mileage. But he drives a Mercedes, so he was smiling. He says, I do pretty well. I do pretty well. I go, all right. All right, getting way behind here. Let me see. River juggling the markets, which is a pin going TP. Fall. First, a stocks. B, commercial property. C, housing. Or D, everything. Yeah, okay. Which pin is going to fall? First is stocks. A is stocks. B is commercial property. C is housing. Or D is everything. I think D. I think you might be right, River. D could be the one. Eli, it also means that someone is getting rich off of oil. Someone out there is. The folks that know the news, we don't know the news. So we sort of just hold on and try to scalp and make a little bit. We did that yesterday. Oil market right now is alive and well. So if you need to trade it, it's not a bad venue to be trading, that's for sure. Let me see, Daniel. If we have crude for a long time above 100, the world is effed. Yeah. Riots everywhere. Nobody will be able to pay for anything anymore. Inflation will skyrocket everywhere. Yeah. Let me see. River Lay, doing well but not settled yet. It's good to hear from you, though, River. That's for sure. Good to hear from you. It's been a while. Let's jump into what we need to be watching for the weekend. And it really does all boil down to the war. And then after this, we're going to talk a little bit about the US 100, the Aussie CAD, and the RUSD. And then we'll probably check in one more time on gold before we sign off. So every time we go into a weekend news cycle over the last 3 weeks, it's been pretty brutal. It's been a lot of things are happening on the weekends, and I expect this weekend to be no different. So this will be week 4 as of midnight tonight or 2 a.m. Here in the States. Tonight we are entering week 4 of the Iran-Israel-U.S. war. Bottom line. Remember on the outset when we had that live coverage, when I got up in the middle of the night and we covered Trump live and we did all these things, he said we're looking at about 4 to 5 weeks and casualties were expected. Okay, week 4. We're getting towards the end of the initial timeline, and now we're in a situation where it's starting to look like this is going to be going for a while. Now, as this goes longer, just like we heard in the live chat there, as this thing progresses, the economic pressure on the world is going to go up and up and up. It's going to be ramped up. There's no question about it. The reason why is because of the disruption of the supply of oil. it gets worse. Here's a good look at the headlines over the past several hours. Iran at war escalates, energy prices spike after Israeli strike on South Park gas field. Israel blew up in an energy war with Iran that Trump will find hard to stop. So what is an energy war? What is an energy war? An energy war is when you are using oil essentially as a weapon. And that in itself is a tremendous, I guess, market driver. You're starting to attack the energy infrastructure. That's what this means right here. This means that we're blowing up refineries. We're blowing up infrastructure. You're blowing up storage facilities. What does that mean? It means that you're going to have a problem rebuilding all this infrastructure anytime soon. That means that if we go to this level and one side starts blowing up the energy infrastructure of the entire Persian Gulf, Iran's hitting against the nations in the UAE, Israel and the U.S. are hitting against Iranian infrastructure. That means that potentially, if it gets bad enough, the entire region, production goes down exponentially. And it's not easy just to go start building refineries. It's not easy to go repair all the oil, all the storage facilities. It's not easy to get all of that infrastructure back up and going again. Second. So if we're looking at prolonged oil prices, that means economic downturn. It means global recession. And if it goes on long enough, it means a potential depression. Think about it. Inflation, higher oil prices, inflation. In order to fight inflation, the central banks of the world are going to have to raise interest rates. Now you've got rising interest rates, persistent inflation, plus potentially a global economic slowdown. It's stagflation. It's the 1970s all over again. Everybody in this equation knows that. Everybody remembers the 1970s that's making the decisions here. Everybody. Trump knows it. Netanyahu knows it. The folks in Iran know it. The mullahs know it. They know it. And to go to this level and start blowing up this stuff is a major. It spells doom for the global economy. So you've got to really pay attention over this weekend news cycle. If this becomes the norm and we start seeing major strikes against these facilities, it means we've gone to the next level. Now, in the United States, there's an impetus, and the West wants to prevent this. They do not want this to happen because they know that it won't just be, okay, production's back online in 6 months or production's back online in 3 months. Okay, we'll figure out a way. We'll boost production here. We'll do something. They know they don't want to go that route, and this is what it's looking like. U.S., they went and they asked for $200 billion for the Iran war to fight the Iran war. Supposedly, they're burning about $1.5 billion a day thus far. So the $200 billion suggests that they're trying to get enough cash to last them at least another couple of months. So all of a sudden, that initial narrative about a 100-day war is starting to look like it. That means we're starting to think towards September. So there's two things you got to be watching over this weekend. Number one, if they get this funding, which I believe they will get, a lot of the senators are squawking. They'll vote for it. They're not going to hang the military out to dry. They're going to vote for the funding here. $200 billion, that's what they're looking for. The energy infrastructure, if you see strikes on that, you expect a big spike in WTI and UK oil, natural gas, all of that stuff. Expect that to be up on Sunday's open. Expect equities to be down. Be watching for those headlines. That sparks escalation. So brings us to our next principle. It's sort of difficult to visualize, but Iran attacks on oil infrastructure as U.S. weighs troop deployments. So how exactly can you start to move towards a brisk end? Well, there's one school of thought: is the United States going to send troops and boots on the ground? Now, once the boots get on the ground, you get into a situation where you may not be able to get out. Once you're in, you may not be able to get out. Right now, theoretically, you could just stop the bombing runs and say, okay, we've achieved our objectives, we destroyed the military, yada, 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 and call it a W and go home. The problem is the Iranians might not stop lobbing missiles. So what happens now? Troops on the ground. There's a couple of potential targets we're watching very closely. Headlines out of Karg Island. That's an area that was bombed. The military installations there were bombed, I believe, 3 days ago. And this is the major hub. This is where Iran loads all of its oil onto tankers and ships it out of the Gulf. Okay, that's absolutely huge. You understand that. So there's a couple areas that they're looking at potentially getting boots on the ground right there. Karg Island would be one of them. If the United States and allies, Israel, could secure Karg Island, that would be an interesting move. I have no doubt in my mind they can take it over, but can they hold it? Well, we'll talk about that more in a minute. Strait of Hormuz, this is the other one. This bank over here, right in here is the issue. This is, I believe, a 270-degree turn. A 270-degree turn for the ships, which makes them incredibly vulnerable from munitions coming out of these mountains right here. So this would be the other target potentially where the U.S. and Israeli forces may land to try to secure this area to free up this strait. Now, you figure there's already mines in there. I don't know that for sure, but I would guess if there was like deep water mines, that's as easy as cutting a tether and letting them rise. That causes major problems. My guess is you could send minesweepers through there in some facility and probably clear that out in a few days as long as you didn't have missiles and drones raining down on you. So the idea there is that's a very important strategic area, and that's the other place you would look for an invasion. You say, Shane, you're talking out of your tail. You don't know what you're talking about. Well, we got to be able to read between the lines. U.S. drops 5,000 pounds bunker buster bombs. Targets near where? Near the Strait of Hormuz. So this is exactly where these guys were dropping those bombs. Those are designed to shake up any underground facilities and destroy any missile drone storage facilities, and also just shake this area up before you go in and try to take it. That's big. That's a big deal. A ground invasion. What are the odds? What does it look like? Well, let's have a look. Polymarket odds. Will crude oil hit XYZ? We don't care. Will the regime fall by March 31st? Not going to happen. U.S. forces enter Iran. This is the one we're looking for. 68% say by December, but take a look at these odds. By April 30th, 59%. By March 31st, which is about 11 days, about 19%. Keep an eye on that one. Now, we've got supposedly 5,000 more maritime sailors, not maritime sailors, but Marines, amphibious Marines are headed to that region. I believe they sent another battleship there. That could potentially happen. But they say they're still about 4 or 5 days off. My guess is probably more like 6 days, plus you got a couple days to stage. You're probably looking at another, week or 10. They believe that they're going in early April. That's where the market's starting to really believe. Now, this is small, 600,000. This is a bigger one. This is a much bigger one. But this is the one right now that a lot of folks believe is going to happen. I think it could come earlier than that. Be watching for those headlines definitely over your weekend break. If you do see those that are sort of suggest that ground forces have gone in and that a ground invasion has been launched, be ready for market chaos on Monday. I believe personally that it will happen on a weekend. It'll happen when the markets are closed. Probably in the middle of the night. It'll be something of that nature. Equities will come off big. They're already pricing it in right now, it looks like. But equities will come off big. You'll also see the oil prices will go way up initially. But if it's a successful mission and they can secure and open the Strait of Hormuz, then we'll see those oil prices come down rapidly. So what I'm saying is get ready and buckle up and get ready for chaos. If you're carrying anything home over the weekend, do it. You're doing it at your own peril. You may get lucky and make a bunch of money, but folks that are carrying, a lot of folks were carrying gold, and gold's absolutely crashed over the past several days. Anything can happen on Monday's open, so be very, very careful. Be very, very careful. That's for sure. Let me see, Eli. Boots on the ground when the market's closed today. I think that it's possible. I don't think they're in position yet, and I don't think Trump wants to do it just yet, but I think it's starting to look like there's no other way. Man, that opens up a can of worms. Because those positions, the 5,000-pound bunker busters are sort of tipping your hand. You're softening that area up so you can launch a land invasion. And, oh, man, it could really be ugly. Let me see, Daniel, what about the Russians and all this? Don't they have a pact with Iran? If they get attacked, they will step in. Well, that's the thing. I mean, Russia does have treaty with Iran. Russia also has military facilities in Iran, and there's a lot of talk about what if those get hit? If those get hit, then what does Russia do? Does Russia get involved? I think the idea there is Russia sort of still has its hands full in the Ukraine, but Russia has a tremendous amount of resources, and I would be very surprised if they weren't facilitating the Iranian missile program in one form or another. But I agree completely. I think the Russians, the Chinese, I believe that everybody in that region particularly, this has the potential. I don't want to give the World War III talk or IV talk. I don't even want to talk about it. That's for podcasts and edgelords. I'm not even going there. But what I will say is this. If it turns into an energy war, the entire world's going to get caught up in it in one fashion or another, whether directly or indirectly. So that's for sure, Daniel. It's a great question. Let me see, 512. How did that jet get hit yesterday? That's a great question, Eli. They shot down an F-35. You're not supposed to be able to shoot down F-35s. The Iranians aren't. Supposedly had no air defense systems. They had no air force. So what does that tell you? It tells you that maybe you don't have air superiority. Why? My guess is it would be Russian or Chinese munitions. It's not easy to shoot down an F-35. They got one. So what does that mean? Big sign. Good point, Eli. Let me see. USA destroyed our countries. Kurd, I understand what you're saying. Believe me, and I've talked with a lot of guys that were in the Gulf, that served in the Gulf, and that's a really complex issue. It's one that I'm not gonna dive into, but a lot of folks understand. They understand what you're saying. They really do. Marvel, how you doing, Marvel? Absolutely. You're welcome, Eli. Let me see. Narek, I just blew all my week's profits away on gold. You did say don't trade to bot ruin the weekend. I just did. Well, 50%, Narek. Don't do it next week. 50% in your pocket. All right, so bigger picture. What is a vulnerable market to all this energy war talk? What is all of it? What about the NASDAQ? Go with me on this one. If you have an energy war in the Middle East, what is the number one thing that's holding back AI development right now? Energy. We were going to pivot to natural gas to build the data centers here in the United States. That's not going to happen. If you have a major energy war in the Middle East, that's over. What happens to AI then? All of a sudden, it's going to be a real problem getting your hands on the energy. Do they pivot to nuclear right away? All of it takes time to build. You can see how everything's connected. We're pricing this in big. Here's the US 100 CFD. You can see we had a sell signal, had a buy signal right here back in 26th of January, went up to all-time highs right around 26 and then crashed. And there was your sell. February 4th, boom, and you've just been on a downtrend ever since. Not really a trend. There's been some pullbacks, but the negative pressure is palpable. Now we're starting to really open up that throttle because a lot of people are looking at this saying, who's going to be the big loser if this energy war kicks off? I mean, look at our markets. They're incredibly volatile. Now we're down 230. We were just down 350 in the Dow. Is Trump going to come out and say something to try to reinforce sentiment? It looks like it. This US 100 could be in big trouble. Let's go to a weekly on this 920 EMA crossover. And there she blows. You got a sell signal setting up on the 920 weekly. For reference, there was your last signal. It was back in the 26th of May. There was a signal right here, a sell right right before our April tariff panic, our tariff panic of 2025. Big move there. And then we recovered, and now what's happening? The game is changing. The game is changing. The game is changing. It's changing. Hope I'm wrong. That's all I got to say. How are the institutions going to trade it? They're not even really worried about a 920 EMA crossover. That's for people like us to try to time these moves. They already know what they're going to do. That's why the signal showed up. Their stops are going to be right up there, right up over 26.5. And what's going to happen here? Boom. It looks to me like that's the play. What could possibly bring this about? Energy. If there's no more energy to make sure that AI growth is assured, and AI slows down, let's say, and all of a sudden you can't build the servers and the data centers and all the other garbage they were building, then what? AI starts to pull back. What happens when AI pulls back? The NASDAQ pulls back in a big, big way. We're on the cusp of that, it looks like. A lot of uncertainty out there right now. Now, the game's not over. There's still time. I mean, this can still be salvaged, that we can still build a case that goes, Shane, you're just paranoid. This uptrend is strong, but it's not. It's really not. I mean, it's clearly there and clearly valid, but take a look. I mean, it's an absolutely epic move on the monthly time frame. We're still in great shape with the long-term trend. No question about it. The tariffs scared everybody a lot more. Maybe we just get scared for a month or two, then we get the nice big bounce and continue. That's fine. What are you going to need fundamentally? We're seeing fundamental trading dominate right now. What are we going to need? You're going to need, number one, you're going to need interest rate cuts. You're going to need a belief that area of the economy, that big tech can grow. And if it's going to grow, it's got to have two things, cheap money and energy. It's got to have it. Right now, tech essentially is rotating around the AI space, right? Well, if AI contracts, what happens to big tech? It's the end of your AI boom. Fiend, at least until the energy gets back on track. Right there, the 38%, 22.5. Yes, please. So you got that 20 EMA right there. Absolutely beautiful stuff. You've got 22.5. Absolutely great bid. Let's go down and take this back over here, US 100. Take a look at the Fibonacci's. As far as what this looks like on the weekly, sort of rotation, you certainly see that you're working on a breakout, potentially a bearish breakout. Monthly, same chart. I just want to know where my 13 EMA is. 13 EMA is huge here. Be watching that closely. We got the 13-month EMA is right there at 23.5. Love it. Right around a big round number. Can't really say enough good things about that level. There it is. We might go there today. It's possible. So we're watching closely here, but things have changed for big tech. That 920 crossover on the weekly, that really shows us things have changed. The game's changed. We haven't seen a cross under since when? 17th of March, 2025, about a year, almost a year to the day, right? Wow. Absolutely huge. All right, let's look at a commodity, true commodity pair, the Aussie CAD. Aussie CAD, think about it, Aussie, gold, Canadian dollar, oil. Theoretically, what should be happening? Well, gold's getting hit, oil's going up. What does that mean? It means this pair should be going down. So you can see the compression right here. We had a nice spike low back in November, rally, big time rally right there. At that juncture, earlier this month, I was looking at par value. I was saying probably going to par value. Maybe not now. Not the way that these fundamentals have changed. So you can see the pullback zone was worked like a charm right around 95 was a beautiful bid. For right now, though, which way would you want to play this market? I really enjoy the Aussie CAD. I think it's a great market, but maybe something like this. We go to a weekly. Look at that. It's a diamond formation. You don't see many of these on the weekly time frame. Let's see if we've got a diamond. What, they don't have a diamond? Not really. That's a rectangle. In any case, essentially, it's a diamond. Diamond formations are breakout formations. See, boom, 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 boom. That's a diamond. Horrible drawing, I hear you. But this area right in here sort of suggests that are you going up or down? Well, it's a diamond. So theoretically, you'd be looking to the bullish side of this, but given our fundamentals, probably not so much. Do I want to buy or sell right now? Probably neither. Probably neither. I would be very, very cautious about what I did just because of the dependence on the commodity pricing for this pair. But something like this, we know we have a pretty much a good clear-cut support zone right around 95. You've got your 13-week EMA down there at 95.06. That's more than likely going to be a great trade. It's just got to come off about 150 pips, which you certainly could. I expect it to be honest with you. It's just to build a short right now. I mean, you could short it just at market and hope the fundamentals take over. The stronger oil against a weaker gold, will bring you off. The question is, did it already bring us off? And it looks like, yeah, it did. So be careful with this pair, but I love it. If it gets outside of equilibrium seems to be like right in here, essentially, right around 96-ish, somewhere in that zone, 96 and a quarter. 95 would be pretty good. 95 would be pretty good. Let me see. Daniel, I'm already short the NAS. I mean, it's a good play, realistically. Let me see. Kurd, we lost 80% of the electricity in Iraq. Yeah, the grid was absolutely destroyed. I've talked to several people several guys that served there, and they explained what it was, and I'll just sort of leave it at that. Let me see. Kurd, is that the 5 and 13 EMA? No, 9 and 20. 9 EMA and 20 EMA. Got a great video on it over at the How to Trade Calm YouTube channel. Go ahead and check it out. Let me see, Kurt. I feel like 20K is possible. Oh, yeah. Anything's possible to the downside. Markets always go down faster than they go up, right? Well, not always. Not in the case of crude oil. But usually when there's a rout on, especially in risk assets, they don't just come down a little bit, they crash. And that's exactly what we're seeing right now. The NASDAQ's off 390 points. How about that Dow? Where's that Dow at? Down about 270. Not a horrible day. Not a horribly down day, but not a good one either. Let me see, Daniel. I'm at, 23,250. I like 23.5 for the US 100. If I was going to take a bid, it would be right off of that moving average right there at 23.5-ish, 23.5 and a quarter. It's pretty good stuff, that's for sure. The problem is the CAD figures were absolute crap. Yeah, it's the Canadian dollar is going to gain because they're going to have a tremendous amount of leverage. They're a Western nation that exports a tremendous amount of crude oil. Canada's going to have a lot of leverage in this situation. A lot of leverage. All right, let me see. Got a question over from the How to Trade community. Ralph H. Are the Australian and Canadian dollar the only currencies tied to oil? Okay, the Australian dollar is tied to metals. So the Aussie, I'm looking at gold, I'm looking at silver, iron ore, copper, those things. They used to have a much bigger impact on the Australian dollar, especially gold, but still that correlation is there. So I focus on the Australian dollar as being one of my base commodity dollars, COM dollars. That's for sure. Actually, yeah, just the Canadian. Yeah, the Canadian dollar's oil and gas. About 7 to 9% of their GDP, of their national GDP up there, is due to oil and gas exports. I believe 91% or 95% of the oil and gas go to the United States. But there was deals that Canada was looking at with China that potentially may be starting to send Canadian oil to China. Nothing would surprise me anymore. That's a long way to go, though. But it is what it is. That's the world we live in. Let me see. River. Yeah, good to see it. Corn. Any opportunity you see for a dual play biodiesel fertilizer issues? That's a great point. I haven't even talked about fertilizer, but that's another thing that comes out of the Gulf states in tremendous. Let's get to see a corn CFD. Tremendous volumes as fertilizer. The farmers here are already squawking because we're coming into planting season here relatively soon, and they go, "What about the fertilizer? How are we going to afford fertilizer?" That's another market driver of food costs going way up. So is there an opportunity in corn? Dual play biodiesel fertilizer issues for all ag. I mean, you have to be bullish corn, don't you? Take a look at the weekly. I mean, you can see what's happened really since this war kicked off right in here. Nice big rally. So we went from down around 438 up to 468. Let's take a look at our macro sense, and maybe we could find a level somewhere. Okay, so this right here is going to be what, 2025's highs. I would say that a bullish play if you had the money to do it. If you make this trade, you're essentially betting that it does evolve into a full energy war. So if you were looking there, bang, I'm looking right at February 2025's highs, and then I'm starting to look at this stuff here. This is Russia-Ukraine time for corn. Then you're at least looking right up in here, maybe up in here. So if you were going to take this trade, how would you manage it? That would be the big thing. That's a monthly. You could wait to buy a pullback, or you could just play a compression buy. I mean, and it doesn't really get any sweeter than that. Compression buy would be, it's not really a bullish pennant. It's sort of a P formation. But yeah, I mean, essentially the long would be here. Stop yourself out under here and look to get that big move. It's not bad. You know, the only thing that really kills that trade is a piece or a quick resolution. A quick resolution to the war. But it's a great point about the fertilizer. I didn't even touch on that, but that's another big thing that's just going to drive global inflation. The whole thing is a tinderbox. It's an economic tinderbox waiting to explode. Going into planting season here in North America, in the Midwest. The Midwest, March, it's just thawing out. They're getting ready. They're getting ready to get these crops in the ground. And the fertilizer is a major component of corn, especially the liquid fertilizer that makes that stuff grow when it gets hot. I mean, you can almost watch the fields grow. So that's big. I haven't done any work in the Midwestern states, taking a look at this year's ag projections. We know that it was a very cold winter. The jet stream here in North America sort of shifted to the right, which suggested that real cold weather came down over the Great Lakes and it hammered the Northeast out west. We had probably the warmest. It's going to be 75 degrees here today in Montana, all-time highs. That's unheard of for this time in March. So it's going to be fascinating, but I tend to agree it's a good spot. I mean, if you're going to be looking to trade corn to the top side, that's a possibility. It's just all about if we can time it right with all the external market drivers. But good point. Let me see. A couple more questions, and I'm going to sign off here for today. Andy Tong. Good to see you, Andy. Welcome. Hi, Shane. Where's the huge discrepancy in price? Well, okay, good point. Hi, Shane. Why is there a huge discrepancy in price to Brent and WTI when you look at them together? Brent is that international barometer. So, I mean, it's a great question. Essentially, what you're looking at is Brent is fulfilling the demand to the Eurozone and a good portion of the world, whereas WTI is largely in the Western Hemisphere. So the idea is that, okay, the West Texas Intermediate, sure, there's a lot of consumption here in the United States, but it pales in comparison to probably what's coming out of the Eurozone and the Eastern nations. That's what I would say. I would say the international demand is higher than just the regional and or local demand here for WTI. That's what I would say. I've heard that before. As far as why does it trade at a premium, could be anything. It might have just always traded at a premium, so they said, we could AI it. We could do an AI search and see if I'm on the ball or not. It's a great question. Let's try it. Let's go AI. Why is Brent priced higher than WTI? Let's see if I'm right. I might be right. I might be wrong according to your AI. Brent crude is more expensive than West due to its role as the global benchmark, superior logistical access to international markets via sea transport, and vulnerability to geopolitical risk. There you go. So essentially what you've got there is Brent is exported to the world and the world pumps the prices. Is that right? I don't know. I don't really trust AI for much these days. That's for sure. It's a good question, Andy. That's the theory. The theory is one goes international and a lot of the WTI stays home here. So the consumption is going to be greater internationally. But, gasoline's a lot more expensive in the Eurozone. So that may have something to do with it too. You have lower, maybe there's lower refinery costs somewhere, or maybe it's just a form of, we're going to make sure that gasoline is more expensive here via taxes. So theoretically, we can charge more for the oil, even though that's not part of the tax structure. It could be that as well. Could be the bureaucrats in control of it. It could be the leases that they got. It could be the oil infrastructure. It could be anything. So I'm not really buying that AI overview. Maybe. Let me see, Daniel. One should be bullish. Food in general, yeah, it keeps you alive. We bought a generator. We have a generator, so we've got our own power if we need it. As far as food, I have a bunch of perishable or non-perishable food, but I haven't geared up on the military sea rations or anything. I know a lot of folks that have. They have 5 years of dry, storable food at all times. And I said, I don't know. If it gets that bad, do you want to survive that long? I don't know. That's for sure. Trader Kev, good to see you, Trader. Welcome. Confident everything's going well up there in Canada. Right on. All right, everybody. I'm going to go ahead and sign off for today. We covered an awful lot. One last level we probably should look at while the U.S. dollar is on the march. This Euro USD is fascinating because we've got a big level. This monthly moving average functioned pretty well. 13-month EMA right there at 115. 115 is big for the Euro USD right now. I would say it's probably one of the biggest out there. I would love a shot to bid 113.54s and maybe take a position from there. But, it's problematic. It's choppy right now. We just don't really know. This is interesting, though. We were right down to our zone about a couple weeks ago. We didn't get it. And then here's the pullback that we were sort of looking at. I wanted to put this trade idea out today, but of course I slept a little bit too long. And, that's one of the things about Forex is I just feel like a lot of you guys that are trading the Forex pairs in the Eurozone have a big advantage because you get to trade that entire London session where we just got to wake up and go in the States. So good stuff right there, but that was a trade that we probably should have had out there. 116s held firm as topside resistance, and you could see that happen yesterday. Now we're coming back off, so we're in rotation. You've got that 115 level, which is your 13-month EMA. You got a weekly 38% right at 116, and that is the rotation. So definitely keep an eye on the Euro USD. The US dollar in general up about 0.5% today. Just a tremendous amount going on in this market. If you take a look at the monthly, what do you really have? You got a long-term downtrend. Trump got in right here. Devalue. That's what we figured. And now we're starting to come back because the war is really prompting some inflation concerns. And the Fed is in no hurry to cut interest rates. Maybe not until December now, they're saying. Wow. That's all I got to say. All right, one last market we got to look at is the VIX. You can see this monthly VIX, we saw an elevated reading right at the onslaught of the war, 35.30. Since then, we've come down nicely. Long-term average is right around 21. We're trading 26 right now, up about 10%. That's a lot of folks hedging against the weekend volatility that we talked about, all those market drivers. Very, very possible one of those come into play. 30 is sort of my elevated view over the long term. I think if we're trading above 30 on the VIX, then there's trouble in paradise. And that could definitely be a challenge for us to deal with on Monday's open. That's for sure. All right, a couple more questions and we're going to sign off. Let me see, Andy. Shane, where do you see metals going up or down? I started off talking metals on this live stream. I put a trade idea out earlier. I'll just highlight this one again. This is a big losing month. April's going to tell the tale, and it all ties into those boots on the ground. It ties into the U.S. dollar and a potential energy war breaking out. But right there, 44.25. That was sort of the trade idea that we were looking at, right around 44.35, something like that. That's a huge level. Does it go up or down? I think we're going to get a pretty good bounce off of that. Famous last words, right? I think. Very confident we get a nice bounce off of that. But if we break beneath that zone, look out. Then we're going to 4,000. Then we'll price 4,000 for a while. And then we'll go to 37. What does the de-investiture from gold mean? What does all of it mean? You're selling stocks. You're selling metals. Everybody's buying, gasoline and oil. Crypto's not really doing much. What does it all mean? Is it capitulation? Is everybody going to cash right now? Maybe. It's possible. Certainly possible. Good question. I have no idea if metals are going up or down, but I can tell you what's going to happen with gold. If that 44.25 doesn't hold, we're going to go for a little bit of a ride to the downside. Maybe we recover towards the end of the year when you start to see maybe a resolution to the war. Maybe the dollar starts to fade like we thought it was. It's just not quite happening, really. Let me see, Marvel. Peace, love to everyone, and a blessed weekend as well. Yep, well, have a great weekend, Marvel. It's that time. We've been going on for long enough. Oil is breaking out. Oil's sort of selling off a little bit, isn't it? 97.74. I don't know what our charts look like. There's your 30-minute. Still trending. Point of control's down here about 95. You'd absolutely love to buy it, but look how far out of the value area you are. The value, top of value is right there about 95.85. Now you're trading 97.75. Nice bounce off of 97.65. Beautiful scalp off that 38%. But very bullish, very, very bullish. But maybe they'll say something right at the end of the trading day and crash this. You only got about another 28 minutes in crude oil starting to sell off a little bit. That would be good. Wouldn't hurt my feelings. I haven't put gas in the car for a while, so I better go do that. All right, everybody, I'm going to sign off. That was a marathon session, but I do appreciate everybody stopping by and the participation. This is a big weekend, so if I see anything that we need to do, I'll jump on live and take any questions and go through what we may be able to expect on Monday. But right now, I think that we're headed for a little bit of some angst, some market angst on the weekly open. All right, guys, that's a wrap. Have a fantastic trading day. Watch yourself in the last couple hours of this session. This could be one of those that gets very interesting. All right, till Monday, trade the action well, and we'll talk soon. See you.